Hi. When I look back over the last 15 years of my investing, then the biggest loss that I've ever made on a particular trade, on a particular investment in the stock market, was with an individual company that I actually knew best. This was the stocks that I bought in 1999, 2000, and in the end I got rid of it in 2004. And this was an investment in an individual company, and the company is a market leader, or was a market, is still a market leader in its field. I knew that company very well because I actually worked for it, and still I decided to invest in that company, and I made an enormous amount of money I lost on that investment. I think around 70% or so of the money that I invested in it. For me, that was one of the triggers as well, and it is my conclusion of, say, how not to invest. And therefore, I want to tell you in this video, quickly give my advice, or based on my experience, for people who are looking at, say, how to invest in the stock market, and for beginners that want to invest in the stock market. And based on my history, I have a few lessons and experiences for you and advice. Number one is avoid individual stocks. When you start investing with index funds and low-cost mutual funds. Avoid the individual stocks, regardless how well you know those companies. They can always surprise you. Don't risk your savings on it initially. Start with funds, start with index funds and low-cost mutual funds. That's number one. Number two is keep the long-term trends in the market, a very close eye on those trends, because when the overall market trend is going down, everything almost in that market is going down. When the overall market trend is going up, almost everything in the market is going up. So when you find a way to identify when the long-term trend is going down, and then you sell the funds that you have, and at the moment that, say, the long-term trend in the market is going up, you buy funds, then you will do very well in the long term. You will have fluctuations in the short term, but in the long term, measured over years, you will invest very well and you will be happy with the returns, I expect. Third part is, say, take it easy, be cautious, don't invest everything that you have at once. Spread out your investments over quite a number of months. If the conditions are good and the trend is up, buy some funds for maybe 10-20% of what you have earmarked of your savings that you want to invest. Then wait a few months, 1 or 2 months, see that the market has gone up, that the trend is still up, buy some more. So take it step by step, don't buy everything at once. So my 3 investments for beginner tips, say, 1 is invest in funds, don't invest in individual stocks, and choose then index funds or low-cost mutual funds. 2 is keep a very close eye on the long-term trend in the market, and buy when that long-term trend is starting to go up, and sell when that long-term trend is starting to go down. And 3, be cautious, take it step by step. Don't invest everything at once, baby steps. Okay, that's my take on investing. Last point what I want to make is never invest with borrowed money. Always invest, say, money that you own and that you don't need for at least 5 to 10 years. If you have any debts, just pay those debts off first before you start investing. Okay, that was my suggestions for investing for beginners.